Doji Candlestick pattern is a key formation in technical analysis that represents market indecision. It forms when the opening and closing prices of a security are nearly the same, creating a candlestick with a small body and long wicks, shadows on both ends. Characteristics of Doji candlesticks. Small body shows that there's little difference between the opening and closing prices. Long shadows indicates high volatility during the trading period, with both buyers and sellers influencing price. Indecision reflects uncertainty, suggesting no clear dominance between bulls and bears. Types of Doji candlesticks. 1. Standard Doji, equal length shadows on both sides, representing pure indecision. 2. Gravestone Doji, long upper shadow, no or very short lower shadow, suggesting a potential bearish reversal when found at market tops. 3. Dragonfly Doji, long lower shadow, no or minimal upper shadow, usually seen at market bottoms, signaling a potential bullish reversal. Interpretation and significance. Trend reversal. A doji can indicate that a trend is weakening and a reversal may be imminent, particularly if it follows a strong uptrend or downtrend. Confirmation is key. A doji alone does not guarantee a reversal. Traders should wait for confirmation from other candlestick patterns or technical indicators.